Another live stream, first day of the March. I just want to show the daily chart, start by daily chart. And show this one over here. Price tapped the 200 simple moving average on daily chart. And it received some reaction from that level. Also, there is this old weekly gap. It is a pretty old gap. Normally I don't look at gaps that old, but this weekend gap is in a key level, key area. Sonra ayarlarsın. I'm sorry, I was checking something. I will get back to it after the live stream. All right. Price seems bullish. It came really close to the range lows, this area over here. It is bouncing off this 200 SMA over here. So yeah, it looks bullish. Momentum is looking nice. The moving averages just cross and both looking above, as you can see, right? If you imagine an arrow in front of the moving averages, this indicator just shows the arrow, nothing else, just for illustration purposes. So it looks like this. Yeah, it is bullish. Let me check the economic calendar. Oh, there is news on 10 a.m. So I might look for a scalp setup. Otherwise, I'm on sidelines. If I'm going to look at scalp setups, I move into lower time frames, zoom into lower time frames only if price is expanding real fast. I mean, this is a fast expansion, right? So when price is leaving multiple imbalances like that, and if I have got a target, a clean precise target in mind, this is the overnight session high or Asia high, whatever you want to call it, it doesn't matter. It's just a liquidity area. Also, price might fulfill this daily gap over here. I am going to check ES chart. I am just curious how it looks. Just want to see what it is doing and where is it. Yeah, it's right at the midpoint of the gap. They both look pretty much similar. And price looks like it is creating the pattern, but price is inside of this imbalance, so I'll wait a little, try to see if price leaves this failed swing over here. Price made us another low. This might be a sweep or price might keep going lower, but right now my instincts, my gut tells me stop looking at the 15-second, because on the 15-second chart these are the liquidity points, right? And this one, when price took out this, price also closed below this simple moving average. So I am a little cautious and I am not rushing to get a stop setup right now. I don't want to enter inside of this imbalance too. Yeah, 30-second looks a little better than 15. I might look for a long setup right now. But the size will not be so big. I don't want to take a huge risk. As you can see, price looks a little fast and volatile. So I'm just cautious. This seems like a combo over here. But this is a really lower time frame combo on. It is on 5-second chart. I will place another buy stop entry here. And another one. And I will take partial on 1-to-1, which is here. And these partials will be a little, what did I click? Did I accidentally click? Ah, yes, I accidentally click market order. This was the sell limit. Okay, that's fine. We can add it again. Trail here. There is a fractal setup over here, but this is 5-second chart. This is extremely lower time frame, so this is much less reliable than higher time frame setups. So this is why I am taking partials at this level, also at this level. Oh, I clicked sell market again, my bad. I just purchased this account and I am not used to its order placement. Okay, yeah, this is a good place to set a limit. The thing about this one is it is so fast and I cannot monitor the two pairs at the same time, right? Now, if this was a 1-minute chart, I could have seen this on ES taking out this high, right? I could have seen this, and I could maybe take the partial from this place instead of here. Also, on the lower time frames, price likes to do some multiple sweeps, like how should I say this? It is like fractal of fractal. Does it make sense? So when price is volatile and lower time frames looks a little bit more complex. It gets more difficult. I tried another one. Now I believe price might want to take out this high. ES seems much closer to that particular high, but let's see what happens. This platform is a little ugly. This new prop firm I'm trying. It's not the best one, but it is what it is. There was a little divergence between ES and Nasdaq, and that divergence took our stop loss. The thing about the that's the thing about the lower time frames, right? Price may just do things like that. So there is a certain kind of risk when we are scalping too. So I will leave a limit order here and gap fulfill for the other one. I just have got 2 micros open. I think I will just close these things. Just give me a second. Mark, I don't wanna see the marks, and show only rejection notifications. Nice. Once again, ES took the high. Nasdaq did not. This might reverse back and take the stop loss, and that wouldn't be a too big of an issue. I am playing it really small, taking small positions, not taking too big, because candlesticks are big and our drawdown is small. Let me check NQ2. All right. It's the thing about the lower time frames. Sometimes it gives very precise entries with really tight stop losses, and sometimes it just chops like that. It is what it is. I took a risk. And now I am watching it. After this candlestick closes, I'm going to trail my stop loss here, right at the low of this candlestick. I'm carefully watching this high over here. Yeah, I'm going to take this out. One partial taken. Stop trailed here. This could have been a nicer setup if Nasdaq didn't chop here on this sequence. I mean, if I was on ES, I wasn't gonna get stopped out on the first try. But that's fine, sometimes that happens. Let's watch it on TradingView because this platform is really ugly. I really didn't like that at all. They got some work to do. This is a platform similar to that Project X from Topstep, but I believe it could have been a little cleaner. Good morning, Andre. How are you doing? And good morning, Andrea. Did I pronounce it correct? Andrea. Andrea Kosic. That's a nice name. Wins in the chat. Okay, baby. You got the strength, you got the expansion, keeps going, and forget about the low of this candlestick. Should we carry this trade until the news release? Or should we get out of it at the gap fulfill? Maybe earlier than that. What do you guys think? Hey bro, welcome. I wanna watch it on 5-minute chart. Let me check where the ES bounced from. Okay, I see it now. ES took this high, lows. This one over here and also this one. February 24. Let me check it on Nasdaq. How does it look? Okay, Nasdaq took this one, but it couldn't take out this low and it didn't retrace towards this level. Seems like ES might have been grabbed a little bit more by limit orders, or maybe sell stops triggered over here, I don't know. But right now ES looks just a little bit more bullish, a little bit stronger. Price might be reversing right at this level because ES took this high. Nasdaq did not take it yet. And I would rather not see this low is being taken this fast. Seems like it is taking the final stop. It seems like it might take out this stop loss. It might be a reversal, I don't know. I didn't really want to see that low is being taken. Whoa, that's a big earthquake here, guys. Okay, it was a short one. There was an earthquake and it was a little shaky. But okay, the stop loss is taken. Now I am going to take a break over here because there was an earthquake. It wasn't something too big, but it was still scary, so I will wait a little, watch the price. Do you trade crypto? Overall, what is your experience with it? I traded crypto in the past. It's been quite a while, maybe 4 years, maybe 5 years. I no longer trade them. Right now I only trade Nasdaq. And I don't look at anything else. Maybe sometimes ES2. Boy, that was scary. Okay, now I'm going to take a trade on ES. That's not something I do often, but let's just experience, right? 2 micros is enough. Let me see how ES behaves. There's a divergence at this little low over here. This 5-minute low. Nasdaq took out this one. This candlestick seems strong and nice. I normally don't trade ES, but well, these two indices moves almost the same. So, and this was a valid pattern on the ES chart. So I just wanted to take it. This is a break. This is the top of the range. And higher high after the tap, and then liquidity sweep, and then price turn back higher. Closed above this little consolidation area. This small area. I entered above the consolidation area and my invalidation is below it. Seems like this will get stopped out either. It will be nice to see a failed swing. Let me check Nasdaq. Looks similar. This is the midpoint of this current big gap over here. I think I could have managed my positions a little better today. Yellow light can induce sleepiness and reduce concentration for intensive studying, as it lacks the alertness boost of cooler white light. Brain associates it with relaxation, potentially causing fatigue over long reads. Isn't this the reason for your exhaustions that you said multiple videos, bro? I don't know, it might be. But it is also exhausting to keep talking about the price on live charts. I don't really know, I'm not sure. That might be correct. But from AI. Okay. I think I would rather prefer being sleepy or fatigued than jittery or too much energized. Because when I used to feel too energized, I was constantly clicking the buttons and overtrading. So I'm okay with being a little calmer, I guess. But the times I used to get too exhausted was either I was talking in front of the charts for too long, or I was coming back from the police station or courthouse. I currently don't work as a lawyer, but sometimes people I know or relatives needs my help as a lawyer. So sometimes I have to go to the courthouse or places like that, and those places are really boring, and I don't really like being a lawyer. So it is really energy consuming for me. That might be another reason for that fatigue. Okay, seems like new scandal taking the stop loss once again. I think it might be much more difficult to trade when price is leaving a big gap like this one. I mean, I honestly would be surprised if price would turn back higher without taking a stop loss after this candlestick. I'm not gonna lie about it. Nasdaq took this low, and this one, no, didn't take this one, just this low, and yes, left an equal low. I don't know, it looks interesting, and I will add another one. Let's see if this can push price towards the gap fulfill, and maybe even further above this high over here. I am going to target this one, this high over here, and I'm going to close 1 micro on 1 to 1 if it reaches 1 to 1. Let me check it real quick. I think, yeah, this high is yeah, around this level is 1 to 1, so this time I will sell limit. Yes. All right. Come on, buddy, don't be shy, just sweep it already. Nasdaq is still weaker than ES, but it seems like Nasdaq will eventually take out this high because it was idling below it way too long. It came close here, couldn't make it. Another here, then this one. Now it get real close once again. I mean, if this reverses without taking out this high, I would be surprised. But again, I was surprised about this turnover here either. Okay, ES took the partial. Nasdaq took the high. today I was testing the account pre-session and I opened the micro chart, then I turned back and checked the settings again. When I came back, it was turned into mini once again, and I didn't notice that. I didn't save it over here like this. So I accidentally open a mini setup, mini short, which equals 10 micro, and it immediately went to loss. I was gonna open 1 micro. So as soon as I noticed it, I closed the position, but obviously it caused some loss. This is why the account started at loss. I didn't mean to trade it before the session. I don't like taking trades before the AM session. Let me check Nasdaq once again. Okay, this is how Nasdaq looks. And yes. Alright. It's going higher, but I don't know, it was a little bit tough price action, and even though the account is in profits right now, I don't feel like these trades was successful. I don't know. I will take another one, another partial. So if this keeps going, we are in profits. If it doesn't, we are pretty much break even. I didn't even think about opening a short positions around these levels because of the way the moving averages look. I mean, I'm going to share this indicator with you guys. It's something very simple. I mean, it's really nothing, right? This one here. But it is something very nice. It doesn't do anything at all. This is the normal moving average, the standard indicator. And this one is the edited version, the version I created with the AI. I don't know anything about coding, but after fighting and cussing with AI for about an hour, I finally managed to create this one. At first, this was constantly moving around the chart, and I was telling stupid AI, you can't even make a proper indicator. And it ended up I was making it right or wrong. It wasn't the AI, it was me. You're gonna keep expanding? I would like that. I would like to see that keeping expanding, but it might stop here. I don't know. Oh, I was talking about this moving average indicators, right? It's nothing important really. It's not a magic. It doesn't do anything, but it reminds me about the direction. It reminds me that price has been going up in both smaller picture and bigger picture. Also, this is something about this. How should I express it? Just give me a second. Now, I am going to make a video about the moving averages, how I use them, and how I interpret them, okay? And the way I use moving averages is not about where price is right? Stoic trader taught me that if price is above both these moving averages, then it is bullish. If below, then it is bearish. Don't try to catch a short when price is above both, and don't try to catch a long. Oh man, you get really close and not fulfilling it. Not cool, man. Keep going. Alright, I'm back with the moving averages. The thing I look at is the angle of the moving averages. I mean, if you look at this one here, averages look like that, right? This is the 20 and this is the 200. This is an ideal bullish condition because both looking upwards. But if there's something like that, there would be a huge difference, because there is always a possibility to see something like this. This was just a teaser for the video, and believe me, it is a really effective way to interpret price action. For example, when this guy is flat, 200, price tends to chop more. And I mean, I always want to see some kind of alignment between the two moving averages. I want a bullish cross like that, and I want both looking upwards, both going above. Okay, and also I want to see the alignment between moving averages and price itself. If price is accumulating below this guy, this 20 over here, then I be more cautious about my long setups, because price might want to reverse after accumulating below it and go back lower, or make a deep retracement and then turn back higher. These are some sauce for you guys, and I know I couldn't articulate it very well, and I know I got a little distracted when I was talking about it, but I promise the video will be better, okay? Let me read this one. Bro, do you trade ES on prop firms? I didn't trade ES too much, but I mean, they are almost the same. They almost move same, so I don't think it would be a big issue to trade one or another. Nasdaq has been sloppy, sweeping our stop losses, taking out some mechanical levels that ES didn't take out, and I have been observing this for a while, and I have got the experimental mindset. I mean, I totally agree with the things you say. Neuroplasticity is important, and it would be great to be aligned with your future self, but I sometimes need to do some experiments either. I mean, I am really an experimental guy, and the experiments I did helped me to learn many stuff. I mean, if I didn't have an experimental mindset, I wouldn't even found about Stoic Trader, right? Before Stoic Trader, I was just watching ICT videos, and I was trying to trade 10 a.m. silver bullet, right? I don't know which one is that 10 a.m. silver bullet. This one? I don't know. Or this one? Maybe this one? I have no idea. So I don't say ICT concepts doesn't work. I believe those concepts work pretty well because, well, they are rebranded supply and demand. So but I really love what Stoic Trader shows. At here I'm just closing this trade and watching the price. I erased the small loss from the morning accident and left just a little buffer. This may look small, right? I mean, for me this was small as hell, and I would never take this as seriously. You should have seen the way I traded, guys. You wouldn't believe it. I mean, I would long for like 30 micros right at this level, and without stop loss, or just I was trading like crazy. I would open a long position right at this level, and I would put my stop loss right below this candlestick like a psycho. I mean, and this has nothing to do with backtesting. I was just vibing, and I don't know, when price was volatile, I was making money. When it was just a little bit chopping like that, I was blowing accounts. So I'm done with that. I don't do that anymore. I'm trading with small size, really small size. And look at this paper trading account. I have been paper trading it. The reason I turned back into paper trade with this 1 micro setups, with these small setups, is because I was a gambler. I was addicted, right? I was gambler. I was stimulation addict. I was constantly clicking. So I turned back to paper trading. I paper traded for about a week by myself. At the end of the January, then I just started gambling on paper trading either. I mean, it was meaningless, right? It is too meaningless. I was just repeating a habit, right? And it was not healthy at all. And I had to change something. So I decided to do it on live stream. I thought, hey, maybe if I do it on the live stream, I wouldn't click like a psychopath, right? Because I respect other people's time and energy. Good morning, Money Glitch. Welcome. This platform is Onyx from this Funded Futures Network. I'm currently not recommending it. I don't have affiliation or something. I'm just observing this. I'm just checking how it is. Now, just give me a second here. I am seeing a clean pattern over here, but I am not going to take this pattern. Look at this pattern. I made many payouts with this pattern. Price goes with momentum. Then it makes a quick tap, higher high, again tap, higher high, sweep, and then turn back higher. I traded this setup many times, multiple times, but right now I'm not going to take this one because of this. Because of the level price hit. I mean, it could very well make another sweep, but still, I'm not going to take this long here because I believe this long is a lower probability long. Correct pattern. Pattern is fine, structure is fine, price is bullish, entry pattern is there, but I'm not gonna take it. Because I don't even know if this one gives a 1R or not. I don't know if this one goes back immediately, goes back lower immediately. I have no idea. This is a place that I want to stay sidelines. So I'm not going to take long positions from this level. And I'm going to hide this simple moving average. Good morning, smooth operator. Welcome. It's nice to see you here. We also hit previous day close on ES anyways. Yes, it's this level, I believe. Previous day close, right at this level. Closing price on Friday and also high of this weekend gap. This is the gap occurred on the weekend. This is previous day close, which is Friday close. Since this is the weekend gap level, it is even more important as a previous day close level. At least this is what I believe. I believe previous day close levels are really key levels and they work amazingly most of the times. And I believe if that previous day close is a Friday close, it is more important because it is a weekend gap. So as we expected, price gave the entry signal, enter trigger, but it came back lower. Take out this low and it might very well keep going lower. It would be a bigger reversal, or I don't know, it might chub and then keep going lower. So I'm really cautious over here. Price has reached this objective over here. I also want to approach this from a risk management perspective because I longed this around these levels and I exited after I saw that price is receiving reaction from this level. Okay, this was already my target for the long ideas. I saw that price was already long, price was going towards some level, and the level was this here. And I also noticed that price is making a consolidation area and price gave a SPS setup on 30-second chart, this one over here. So I took the SPS, I added after price turn back higher, I took my partials along the way and I closed the last runner right at this level. So if I believe the price might keep going higher after this level is taken, it would be a stupid behavior to get out the long and enter it once again. I mean, I already killed that long over here, and if I took a long positions over here, I would have taken the same exact position once again. So right here, my bias is still bullish, and my bias will be bullish as long as price stays above this moving averages. I mean, for me, this is bullish unless it reverses or until it reverses. If I see a reversal, then I'm not bullish any longer. But until then, I'm looking at this bullish. But just because I'm bullish, I'm not going to long at the highs of the day right after those highs formed. So how could I look for a long setup if price goes above this level, breaks above with some conviction, some imbalances? then I might consider taking scalp longs. But again, I wouldn't carry those positions too much, because what do we see here? When the daily charts are going somewhere, we see a lot of wicks. A lot of wicks means price makes a lot of mean reversions inside of the day. Even though your bias is correct, even though my bias is correct, I could easily get clapped out if I am entering my trades on extreme levels. I mean, look at this. This is a quite bearish day, right? But if I am entering short positions around these levels, and if I am trying to carry it, if I am trying to be a hero, then I will get clapped out over here. That daily candle was just one example. So I think it's best to wait around here, because I'm not going to try to catch a reversal either, because it's difficult to catch the reversals. I don't know how the price is going to reverse, because sometimes price looks like it's reversing, but it is actually going higher with slow grind movement. And sometimes it makes a clean reversal, and those times I can get to catch the reversal setup. Some other times it made some additional sweeps before the reversals, and some other times it just consolidates slowly and then reverses. So I'm not going to try to catch the reversal, and I am also not going to long it around here. What would I do? Well, let's imagine price made some deeper retracement, maybe towards this level, maybe, or even deeper. Maybe price comes back to this level, I don't know. If I see a deeper retracement and then an internal consolidation structure, by internal I mean when price comes back lower, price would be created a new range. The high of the range would be this level, alright? And the low of the range, let's say price is, let's say price is consolidating like that. The low of the range would be here. This would be an internal leg. If inside of this internal leg, price consolidates and then breaks above, and then prints my classic pattern, then I can long it from here, or from here, these levels. Otherwise, I'm just sidelines. If it makes a mean reversal, if it starts dropping like there is no tomorrow, then I can look for SPX short setups, my pattern again. My logic is that simple. If there is a big momentum, and if price haven't met a target yet, join that big momentum. If price went big, if price created a big momentum, this would be an expansion. I released a YouTube video oh, it can be green too, about this one, retracement, and I am going to wait for my Fractal liquidity sweep. I want to give credits to Stoic Trader for this one. Even though this is the simplified interpretation, this is actually the same exact thing with the swing breakout sequence combo model. I learned this model from Stoic Trader. Let me show it. This is the breakout, and this is the external range. Okay, price taps, makes a higher high, sweeps the external range low, and then starts to consolidate. And this is the internal range. Price reverses back higher and makes the same exact pattern. Tap, higher high, sweep off the tap, reverse back higher. And you've seen me, I have been taking these setups over and over during the live streams, especially when the price action is slower, or if I am not sure about the length of the retracement. If I was sure that price will be turning back higher after tapping out this level, well, I would definitely take a long position from there, but I'm not sure. I don't know. I mean, price might do this one. Price gave one trigger over here, entry trigger, stopped it out. Another entry trigger over here, stopped it out. Giving another. I don't know if this one is going to get stopped out too, because the way I trade, I put my stop losses right at the last low, right? And if price keeps doing this, imagine one more stop loss and one more stop loss and one more stop loss. Price can very well do this, do that, right? This would be a clean SPS short setups. So I don't just persistently long if I don't see a momentum behind the price. I mean, this over here could be a great long setup if daily chart was looking like this instead of this. It's that simple. As long as daily chart is inside of this range, I'm not gonna take these setups. I will wait for this one. But if and when I believe price will start to expand again, I expect Nasdaq to sweep these levels over here, about 23k, 22k on monthly chart, and I believe it is going to reverse back higher and hit 30k. That's just my belief, not a financial advice. I believe that might happen. So when Nasdaq starts doing that, I can then jump every single long SPS. But until then, I am cautious. I believe even these longs I took, even though those were profitable, I believe these were risky setups. I mean, target was really clean, this high and full fill of the gap, and momentum was quite strong, but still these setups were risky. Why? Because there was news release, and I don't know, this is a strange day, this is a new day, this is not just another day, in my opinion, because of this big gap over here. This is a not common occurrence, not common occasion. So if there is something uncommon, there is a war going on, right? And there's a big gap over here, then price might act uncommon, right? It's that simple. And during an uncommon day, I cannot force something that I commonly use. The logic is that simple. Screen is not fully fit in good ratio. We couldn't see what chart are you on. Just give me a second. This is the display capture. This is the video resolution. Is it because of this? Can you see my chart right now? Or did you have problems seeing this paper trade balance over here, or was it something else? I really feel like dinosaur, guys. I'm sorry about this one. I'm not really a tech guy. I mean, look at this. Wrong account. This is hilarious. Okay. Since the account is suspended, I will change it later. Boundaries. Just give me a second. I understand why. No, I messed it even more. Okay. How does it look right now? Does it look better? Guys, this is where it gets a little more difficult. In the past, I would probably be chasing something over here, either a short or a long, I don't know. And I would probably be changing my ideas constantly. I would maybe open a short here, targeting these lows. But right now I'm not going to do that. And I want to hide these gaps because we already know it is there. Now, let me zoom out a little bit and mention something else. If you watch my first YouTube video, top of trading view chart. Just give me a second. It is not working properly because of this one. Just what happens if I do this and this? How is it looking now? I think this fixed it. By the way, thanks for letting me know about this kind of issues. Do you see the whole chart right now? I believe it should be fixed right now because I was messing with this one yesterday. But right now I believe it's okay. Let's go. Okay. Now I want to mention one of my videos. Let me open YouTube and the channel. This one, the mechanical liquidity cycle. Now check this area over here. It is a really clean consolidation area. See that, right? We can don't need to mess around with this too much. It is just a clean consolidation area. This is a very clean and precise breakout. And this is the retracement towards this level. If price takes out this level, that could mean two things. I mean, there would be two possibilities. Possibility first, since price has been consolidating for a while and made a higher low and created this range also, break of this level could mean breakout lower and price might constantly keep going lower to take out these levels and maybe even these levels. This is one interpretation, but there is also another one. Price might want to take out this low, use this level as a support area, and then turn back higher. So since we can't see the future, and I believe nobody can see the future, we got several choices. We can bet on it like this, but I obviously cannot do that because I don't want this big stop loss. Even 1 micro creates $300 risk, and that's too much for me. I would rather scalp. If I'm going to take 300 risk, I would rather take a scalp and be done with it fast and get maybe 3 hours, maybe 4, 5, 10, I don't know. Right now, I'm going to draw these levels. This consolidation area over here. This is a tap and this is another tap. Let's mark this one. Price will either keep going higher or come back and take out this level. After it takes out this level, price will either use these areas as a support level and reverse back higher, or it will keep going lower. I know this sounds like, this is starting to sound like an ICT live stream. It may go up or down, both direction, but hear me out, okay? If price comes back lower, right now I am not interested in long setups over here, okay? Because it is expanded and it is in expansion areas, and daily chart has been consolidating, and it might very well make a reversal or deep retracement, and in both scenarios I could get stopped out easily over here. The only setup I could look for here is a combo scalp setup or fractal liquidity sweep scalp setup. Even if I take a setup around these levels, I wouldn't care it too much. Okay, if let's say price decided to come back lower and take this level. If price takes this level, I don't know if this was a bearish momentum, if this was a start of the bearish movement, or if price would take out this level and then turn back higher. So what do? I just simply wait. Price takes this level, I wait. For what? For a consolidation, and then reversal, and then same exact pattern inside of this range. So as you can see, I am looking at the levels with the market liquidity cycle, mechanical liquidity cycle idea, right? I am interpreting price action by using consolidation areas, and I am always considering both possibilities. I mean, this break can mean a bearish market structure break, because bearish market structure breaks occurs just like that. Break, maybe test, and then keep expanding lower. But also sweeps happen like that too. Sweep and turn back higher, right? Since both is possible, I don't bet any of them. Instead of betting on them, I just wait. Wait for the structure to confirm. Wait for order flow to show its hand. Wait for price. Show me this pretty looking pattern inside of smaller range. And finally give me a fractal liquidity sweep. Now look at this, okay? This is the bigger range over here, and this is the breakout. I mean, this is very obvious, right? And when we zoom in, price made another range, went above the range, and stayed above the range for a while, right? And went back inside the range by sweeping the lows right above the range and some inside the range. Came back to midpoint of the range, turned back higher, made a tap, higher again, and if price takes out this one, and then give my entry pattern, that would be what? A fractal liquidity sweep setup. If you didn't watch it, you should watch this video after the live stream. It's a very simple video. I talk about SPS, I talk about how I used to trade, how I made all of those payouts with a small capital. Spoiler, it was partly luck because daily price was quite bullish and I had no idea what I was doing, right? I was seeing that, well, this pattern works and constantly clicking that pattern. And when that thing I found, particular pattern I found, the particular SBS style, stopped working, stopped playing out, I just kept clicking to that. And when I couldn't make any money with that, I just stopped the SBS, stopped trading it with the SBS altogether and just started trading with my gut feelings. And I was also smoking too much weed and I had a shit lifestyle, shit sleep cycle. So eventually I turned into a gambler and who cannot make any money, right? I had an edge. I lost it because instead of keep the good work, keep the discipline, and adapt the new market conditions, I just let it go, YOLO'd all the way, and I paid the price. I felt extremely bad. It was an awful feeling. So I took a step back, accepted what happened, acknowledged it. I didn't blame myself for it. And now I'm building everything once again, but this time I'm doing it live, and this time I'm even more confident because I succeeded once, and this time I am even more disciplined, even better. Right now I don't even have a funded account yet, right? I just bought this little thing over here. I don't have any money, right? But I don't care because I have the discipline, I have the process, and I firmly believe in my own skills, and I am absolutely certain that I will keep improving myself, I will keep working hard no matter what, and eventually I will become a lot better than I used to be. Alright. ES still looks better than Nasdaq. I'm not surprised to see this retracement ended right at this levels. ES almost came to the weekly gap. Nasdaq probably did so. No, it's a little further away. Doesn't matter. I didn't want to pick a bottom over here. And I didn't want to long when price closed above the simple moving average 20. I mean, this is an option too, but stop loss, it was a little too wide and I didn't want to take this one too. Now Nasdaq is taking the high. ES is falling behind a little because ES already hit this level over here and Nasdaq did not. Now Nasdaq wanted to come back to this level either. Do you want to see gold chart? Let us check gold. I'm just curious what it does. I normally don't trade gold, but not so. This one. H 2026. Let's look at the proper chart. Do I look something? Just give me a second. Isn't this gold futures? Gold contracts are different probably. Let's just open the continuous contract. All right. Let me check the 50-minute. I really like to see these gaps work as a magnet and pull price towards themselves. Okay. This is an area over here. A nice consolidation area, I guess. Reverse higher, tap. Equal here. Price just took out those levels. But price didn't make a higher high. If gold made a higher high here and then come back to take these levels, this could have been a nice long setup, but in order to be a correct or valid fractal liquidity, I need a higher high. I need a SPS combo over here, so I don't think there is a valid long setup over here. Also, price looks a bit choppy, and I didn't like today's gold price action. I'll check this drop too. Yeah, no, I didn't like this one. I wouldn't take any trade from this one. I believe I can't add gold to my trading too. I don't know, but it requires some time, some practice, backtest, etc. and or paper trades. Because sometimes I don't know, indices looks much better than gold right now. Both these indices. I mean, just look at the way candlesticks looks, right? Do you see this little gaps over here? Maybe you know this. Just give me a second. Close everything. What the fuck is this? Okay, I drew this. I remember. All right. These gaps over here. Maybe you know this from ICTAs as volume imbalances. See this? If price is consolidating and leaving too much of this, then that means volume is low and price action might be weird and choppy. I don't like trading this kind of price action at all. If there's too much volume imbalances and consolidation is there, I don't like it. But if you look at these, there are a lot less volume imbalances, and you can see that candlesticks are looking thick. Not just this one. I don't like this one. Okay, forget about the gold for now. Let me check the chat. Maybe short PDL, maybe. Long at 879. It's really difficult to pronounce this on a different language. When I see that, I have got a tendency to pronounce this on Turkish, not English. So let me find that level, 879. Did you already take this long over here? 800. I forgot. 79. Something like that. I mean, looks nice. Out of longs, good SPS setups. Yes, it looks good. Did you do that? Your volume profile magic once again? Andre is using volume profiles pretty good. I believe he's getting somewhere, and I believe over time. Do you on Twitter? Oh, okay. This is the setup. Yeah, it looks great. Where did you put your stop loss? Below this low? I mean, it looks lovely. Great setup, and I'm happy to see that took that one. Now, I want to mention something really important. The fractal setup that I mentioned, it is invalid right now. Why? Because price already reached the target. If price swept this low, for example, let's say, if price did something like that and then turn back higher, then I could have take a small scalp setup, take partials or on 1 to 1, 1 to 2 partials at these levels, and maybe close all the positions over here. Maybe, I don't know, leave a runner. It doesn't matter. What matters is this is a nice internal level, and I would like to enter it with the order flow. I mean, when the order flow is bullish like this and price sweeps this and then turn back higher, I would like to take this one. But after price reached the target, wicked it, wick above the high, right? Price took this high, hit this level, and then came back lower. Then I am not interested in this fractal liquidity over here, because why? This might be a order flow shift over here. So I wouldn't take this one. In fact, this is a sign of weakness in my perspective. Of course, price might still make another high, but if you think about the supply and demand concepts, right? This is the swing point. This is a break, some kind of break. Even the sweeps are break because price breached this level. And this is what? A supply, a demand responsible for this break or breach. Price tapped this demand, failed to make a new high, and then closed below the demand. That is a sign of weakness, or sometimes sign of weirdness for me, because during these kind of extraordinary days, price may sweep this SNDR level, SNDR low, and then turns back higher. I tried to trade this for a while, but it didn't end up very well because I was contradicting myself with myself. Because some days I was using this as a support level and as an invalidation level, and some other days I was using this as a reversal level. So I noticed that that was a inconsistent behavior. Some days wait for sweep of this and then enter, and some days treat this as if this was a strong level. The best way is the thing I apply right now and the thing I really like to see. This is a subtle nuance, but I observed this many times and I want to share it with you guys. Price makes a zone, area, consolidation, whatever you want to call it, range, it's all the same. Price breaks above. Before it breaks above, it creates some kind of SNDR. Let me draw this wider so we can put the SNDR properly. Okay, so price comes here, creates the SNDR, and price breaks out without tapping the SNDR. After the breakout, price retraces, but it doesn't tap the SNDR. It taps this high, for example, or these levels. For example, let's say price tapped this high over here, but it didn't come to this SNDR level and kept going higher. Maybe left a wick over here and then came back to the SNDR. I believe this is a nice long setup. And especially if price does this combo, that is something amazing. I would always take that setup. This is the SNDR level, right? This is the old high. Price first used the old high as a support level, but the buy limit orders and aggressive buy orders doesn't allow price to deeper. There's some kind of strength over here. Price makes the higher high, maybe hits some kind of sell limit orders, I don't know. Then price comes back to sweep this low. Maybe there was some trailed stop losses over here. Maybe some breakout buyers that waited for confirmation, quote unquote confirmation, because some people perceive this like this, like that. They look at this high and they say, well, this could be either breakout or a fake out. So I will wait for confirmation. They wait for their confirmation. Price breaks above this high over here. Sometimes they take a long setup and take their profits because price moves like that. But sometimes, some other times, the times we like, price creates the SPS, sweeps them out, and then turns back higher. And if price couldn't tap this SNDR and kept going higher, that is a sign of strength for me. And I would like to take out long from here and also from this combo SPS or fractal liquidity sweep over here. Okay. Otherwise, I would be more cautious about this level. I mean, if we look at it here, this is the SNDR. This doesn't look the way we want it to look. In our example, price breaks higher without tapping it, and the first retracement doesn't tap it either. In here, price goes higher and first retracement immediately taps it, and price cannot even make a new high and comes below it. This is either a sign of weakness or a sign of consolidation, choppy price action. Price might still go above this high. It's still a possibility. Everything is a possibility if you think about it, but it is a possibility that is not in my favor, that I wouldn't want to participate in, because it becomes a lower probability. So price is inside of a huge gap and it is consolidating, and what we are doing, waiting. I think we are doing the best thing possible right now. Ah, you are talking about this one. Okay, on 30-second. This might be a break if we follow the price action with candlesticks, and this would be the tap. This would be 4, 5. Price made one last sweep. This closure looks like a nice setup, I guess, but again, it doesn't give 1 to 2. I don't know. This seems nice, but the placement of it is a little bit too high, at least for me. Do you have any kind of questions right now about the things I mentioned, or about this price action, maybe about the setups that we took? Yes, looking like it is giving a nice setup over here. This one. But I was busy talking and observing Nasdaq price, so I didn't see it. Would I enter it? I guess not. We can try paper trade over here just for the experiment and learning, but I will do it on micro because the account is small. I will show you the setup idea in a second. Not the greatest place to enter, but I'm just showing the idea. This is our consolidation area. The area has broken out. This is the expansion. Let me make it green. And this is the tap high above the area, the external range liquidity, or just range liquidity. We don't need fancy names, right? We can call it tap low, or range liquidity. And this is where retracement starts, right? Let me text it too. And after this retracement, see this little consolidation area over here, another one. So let me draw that too, and high of it is here. I think I will hide these things to make it less ugly. So this is the area broken out, expansion, retracement, and little area, again expansion, the tap low, range liquidity, again the tap low, range liquidity, but in smaller scale. This is why I call this fractal liquidity. Because price is fractal and price did something over here with the bigger picture, and price did the same thing again with the smaller picture. And if we zoom in on 30-second chart, for example, a really small consolidation area over here. Do you see this? Maybe look at 15-second. Maybe this area, or maybe this one. I don't know. Doesn't really matter. And again, same fractal movement. This is a double combo or something like that. Maybe double fractal sweep. I don't know, whatever you want to call it. Smaller fractal liquidity. I don't know, whatever you want to call it, okay? Fractal liquidity. So this was basically the idea. I entered from this just to show you. I mean, this is not a bad entry because price is already closing above another range over here. Do you see this range? So this is not too bad entry, but ideally I would want my entry, I would want to get my entry around this levels probably, I don't know. Above this candlestick looks nice. This one, stop is here. If I enter it like that, I would probably take a partial from this level because I wouldn't know if this would be a divergence with Nasdaq. Nasdaq already taken out the high. It doesn't look like a divergence, but it could be. So let's take a partial for the sake of it, just to see the logic and understand it. And then this might be 2 hours or maybe runner. I don't know. That's your style. That's your thing. That's your deal. I can't say anything about it. I don't get to say anything about it. And if this was live money, I probably would trail the stop to break even. and I might even exit after these levels. Because I'm not really interested in making huge Rs, making huge profits. I'm interested in just creating the habits, profitable habits. That's the only thing I'm interested in. I mean, look at this account, okay? Originally this account was going to a 4K account, but on one of the days the system was buggy and opened too much positions and profit became huge, so I reset it to 5K. But it doesn't matter. I just want to show you how it has been going, right? And I want to show where did I make some mistakes on this paper trading account. Because let's for a while consider this was as if it was a real account. This looks pretty nice, right? Really nice. And this looks yeah, this is nice too, because the risk is not more than this. Since this is partials, it looks smaller. But yeah, it goes fine. But look at here. Some overtrading behavior. And then this trades. But it goes alright for a while too. And then look at this one. Right? And this, and this, and this one. If this was real account, I was going to risk blowing all the money, but not all the money. Also blowing this process. I mean, if this was real money, I would probably blow it over here. Because this is paper and its psychology is easier. I just left it like that. I just told myself, okay, I overtraded with the paper trade account. I made a mistake. I shouldn't have done it. I'll just leave it like that. If it gets blown out, I move on. If it gets TP, I still move on, but I take my lesson, take my note, and don't do it again. I did it when I was trading alone. This is why I don't trade alone. I only trade on live stream. Because I know that some people are looking after me, looking at me. I mean, some people are trying to see me as an example and make money out of it, and I don't want to abuse that, right? And you have been watching my live stream maybe for hours. It's been 2 hours, right? And I would never want to waste your time, right? Everybody's time is really valuable. If you think about it, your time is actually your life. I never want to steal from anyone's life, right? So this paper trading with the live stream was keeping me grounded, and as soon as I noticed that, I told myself, okay, I keep doing this. Then I purchased an account, passed it, I activated it, I immediately blown it, and I told myself, okay, I'm not doing this on my own. I'm not trading alone, because when I'm trading alone, a monster inside of me wakes up. So this was again when I was alone. This was too when I was alone. And these are when I am trading with the live stream. So, I mean, look at this. If I can really keep disciplined, it's not too difficult to do it, right? I mean, the things I do are not magic. I'm not a genius. I'm not doing too difficult stuff. I'm just clicking on the things I showed you, right? I just clicked this on, it went to profit, and it's same thing over here with the evaluation account. So I forgot what I was talking about. I think I'm getting older. Let me sip my coffee. Do you guys remember what I was talking about when I started yapping about this trading psychology stuff? Hey, were you even listening to me? I don't know, guys. I really love these live streams. I don't get bored. I just talk about price and my past experiences instead of overtrading, instead of gambling. I really appreciate your presence over here, guys. Um, thank you for keeping me grounded. You really help me a lot, more than you realize. I mean, most influencers are trying to chase previous day close high, might be shortable. It might be. What do you exactly mean by previous day close high? Do you mean short after price loses the previous day close level? Oh, RT chart. Gap was not filled. Okay. If this was real money, I would close it. So I will close it. Even though this looks like an SPS, it's being quite slow, choppy. Oh, my uncle is here. Hello, uncle. How are you doing? Guys, my uncle is a graphic designer and he helps me to make my videos a little less ugly. $1,000 in pay. He also created this logo for me and this banner. It looks nice, right? All of it. Even this name was his idea. So I appreciate him. Let me show these caps once again. Let it. Yeah, I think 7%. 6%. Don't need this one. Open the moving average. Please stay close. Please stay low is already taken and price reverse back higher from that level. Let me keep it on my chart. Make it black and thin. Mark it as PDL. Lock it. Okay. This is how ES looks. Oh. Lunch is getting closer. Price seems like it is receiving some reaction from this previous day close or weekend gap high. Same thing, same level. And this 200 simple moving average on hourly chart. I wouldn't be so surprised to see a reversal from these levels, or maybe more choppy price action. I don't know. Yes, created the pattern I wanted, but Nasdaq already taken out the low high. I saw this a little late, so I didn't take it on my evaluation accounts, and instead I took it on this paper account just to show you guys the idea behind it. And if we look at Friday's price action, almost the same exact thing occurred here. Nasdaq has taken this high right over here with this wick over here. Let me show both. This high Nasdaq took, ES couldn't. Then price came back to sweep this fractal liquidity level. I didn't want to take this one on Nasdaq because price already taken the target, so I didn't take the risk. Then I saw this on ES. On ES, it looks like a clean fractal liquidity, and inside of 30 or 15 seconds, this one too. It's almost visible on 1 minute too, but not in form of a swing, instead a black doji. Doesn't really matter. ES did this today, and this is the expansion higher. This is the zone or consolidation area. Price left the area with the expansion. Price started its retracement back towards the area. I had no idea if price would turn back higher from here, or if price would keep going lower. I didn't want to catch this fall in life. I also wanted to be careful about taking this mini reversal over here. Then price created this mini reversal, a fractal reversal inside of this leg over here. After fractal reversal, retracement, higher high, sweep the retracement, keep going higher. Let's check on Friday's price action, right? A consolidation area over here. This one is a tap, and this one is a tap too, doesn't matter. The expansion above the range. This is a little range too. This one over here. But let's focus the bigger one. A breakout above the range. Not the cleanest breakout, but still an imbalance and some candlestick closures. Price is consolidating above the range. That means price is establishing its new price levels above this range. Price retraces. This is the expansion. This is a retracement. We don't know how far it is going to retrace. This low, which one is price? We don't know if price takes out this low too, right? Or this. We have no idea. Price could very well do this too, right? Or we don't even know if this would keep going bearish, because there are many patterns. If you backtest, if you look at charts, you don't even need to backtest. You are a trader. You are observing charts every single day, just like me. You know that sometimes price reverses like that, right? Or looks like it is going back higher, but then things like that, or just chop a little and then reverse, thing like that. Okay. So I didn't know about it, so I just waited. Price made a really small consolidation area over here, right? Price didn't take the range extreme yet, and just look at the Nasdaq over this level. I mean, it would be better if Nasdaq didn't take out this one too, but yesterday that happened, so I got suspicious. And look at this candlestick over here. Nasdaq took this high, ES couldn't take this high. Nasdaq and ES swept this fractal liquidity level, and also ES made a double bottom. I didn't notice that, but yesterday we observed, it doesn't matter what we take. This could have been a stop setup too. We saw this fractal and we entered long right at here. Pretty clean. Today, same exact idea. Again. Now, this is a paper trade, right? I didn't make any money. But in past, I did make money, but I believe these paper trades are more valuable than all the money I had ever made, all the accounts I have ever passed. There was some account a CFD account, maximum drawdown was 10%, and I was able to pass that account after 9.9% drawdown. I was feeling so happy, I was feeling successful, but in fact that was just forcing my luck or just gambling, right? So your previous day close short idea seems to... Oh, hello cousin. My cousin is here too. This is turning into a family stream. All right. What was I talking about? I was talking about this same exact logic and why these paper trades were much more valuable than making money, at least for me. If I get really used to it, if this can turn into my second nature, my reflex, and if I don't lose my shit in between, right? I'm going to be ended up as a money printing machine. You can scale this as much as you want, right? You can trade minis, you can trade even more. You can trade the same exact logic on higher time frame with options. I don't know, price always moves like that. That's the nature of the price. Let us just check the higher time frame, right? That fractal idea. I gotta show it on the continuous chart, so I will open this one. Look at this daily chart, okay? This is a nice area. Price broke above. Tap. Price took the tap and kept going higher. After price kept going higher, if price did something like that, tap, higher high, that would be our next structural target, and we would like to see this area as protected, this low as protected, but price did not do that. Price immediately went back lower. So this became the tap low, because logic of the tap low is what? The first low after the breakout. This is the tap low. And if price does something like this and immediately goes higher, then this becomes a tap low. Simple logic. Right? When you look at it like this is a tap low. So there is the same logic over here. Price left a little tap, took that out, immediately reversed back higher, and left some weird inefficiencies over here, some weekly gaps, right? Weekend gaps. Then this become a tap low. If we consider our mechanical liquidity cycle, this is our first step. This is our breakout. Right? This is, and you can see there are some imbalances. After the breakout, price tested the area and made a higher high. So this test and higher high are engineered liquidity. Just type liquidity. And fourth step, take the liquidity and reverse. And the SPS, it has got same exact idea, right? Breakout is the first sequence, tap is second, this is higher high is third sequence, and sweep and then keep turn higher, etc. Same logic, there are no difference really. I mean, I learned this from Stoic and Dave. Dave teaches FX. Dave was calling this pattern Dave the Rave pattern. You can call it whatever you want, right? It's the same exact logic. It's just I don't know what it is, and I don't really care. And this is another little consolidation area inside this retracement leg, right? You see these highs, and this consolidation area looks even more visible on 4-hour chart. Let me show it on 4-hour. See that? Price left this little consolidation area, left this low over here. Price took the low and turned back higher to take what? This high. This is a completed internal liquidity sweep, or we can also call this fractal liquidity sweep, right? And if you look at the ES chart, it looks pretty much the same. The range, breakout of the range, retracement towards the range, higher high. Price took the retracement, reverse back higher, a little range, another tap, and price ES was able to take out this all-time high level. If you are in Stoic Traders private Discord, you probably saw that Stoic was bullish around these levels, expecting all-time highs on ES and maybe Nasdaq too, but Nasdaq couldn't make it. And if you look at it, another one over here, right? And if you trail the highs and lows, this becomes what? The last high, and the low created it, this one. So price shoot stronger and took these two at the same time, almost at the same time, and then reverse back higher and turn back to Nasdaq. Again, same logic. This was the low that made a retracement towards this consolidation area, and this was a combo setup. After price took out this and then came back and take out this high, Now this low was the low that created this high. So this became the liquidity point. Price took it, right? Price tried to reverse. Seems like price is failing, and we are getting closer to second quarter, and price has been consolidating so much, and that's why my analysis is to I believe price repeats some cycles on higher time frames, and I believe this year price will create that cycle once again, right? If you are following me for a long time, when price was around these levels during April last year, about several months ago, how much months is it? Yeah, about almost a year ago, doesn't matter. I marked this level, this step low, and I didn't even make an analysis because I wasn't so advanced about this stuff. So I just told my followers that I was observing this level live, trying to see what it does, and I told everyone I was really curious to see if these levels work despite the tariff news, the China tariffs, the Trump tariffs, things like that, and those work pretty well, right? So I really got convinced that price does the same thing over and over again, and the same logic, almost the same logic over here on the weekly chart. So I wouldn't be so surprised to see a wick on monthly chart, a candlestick like this one. They can easily do that, right? Sweep these levels, then turn back higher. I might be wrong, but it doesn't matter because I'm not going to take risk based on this. I will just follow price action, just like I do every day. Okay, Nasdaq seems like it might be creating another one. Still, I would take the fractal liquidity sweep if it creates it, because I think that is a strong confirmation, and more than strong confirmation, I don't want to be sure, okay? I don't want certainty. I just want to be certain if I was wrong or right, right? I mean, I know that I can never be certain, but if price prints that pattern, gives me an entry, and then turns back and takes out my stop loss, then I will be damn sure that I was definitely wrong about something, and there is definitely something wrong over here. It might be reversing, it might be chopping, right? So I can easily take a step back and reanalyze things like that. So that's why I like these fractal setups, especially when price is not very fast. I mean, if you were here in the beginning of this session, this live session, you saw that I was longing around these levels. Why? Because I was betting on a already established bullish momentum. If I am betting on a momentum, then I'm not looking for a fractal anything, because if momentum is really high, price is not going to print something in the fractal. Price will just go its way. If price is dropping that, then it is not going to do things like this. It's not going to do that. This is a bearish fractal example. If it is going really fast, it will go something like this, right? So that's why I didn't wait for a fractal or something. I was betting on this momentum, and that betting on that momentum is simply looking at these candlesticks. White candlesticks right after 9:30 open, and Imbalances. It's that simple. Right now I want to see, just give me a second. Okay, delete this one. Delete. If I see something like that, I might take it. Tap, higher, high, sweep the tap, go back higher. I mean, these fractal setups at least give some partials, right? For example, if I took this one, is this an imbalance? No, it isn't. This was a valid one. It gives 3 Rs. And if I waited for the next one, it would be something like that. And that would hit 2 Rs. Since I always take partials and trail stop losses, I don't lose with this kind of setups. Right now, I think price is showing some strength and momentum. I'm not exactly sure, but I believe price might coming to tap this daily 20 SMA level and this previous day open level. This level, maybe this SMA, simple moving average. Price hit 200 simple moving average, so on daily chart, and received some nice reaction. I already took something from here, but I got shaken a little bit around here. I think I should have left my stop loss right at range extreme. It wasn't a necessity to trail it here, but it doesn't matter. We can do that reflections later. I gotta do a reflection for last week's setups either. What do you think about this week's open? I'll be very honest. Your English is good and your teachings are very easy to understand. Thank you. Thank you for your kind words. I mean, you are not making it complicated more. You are just telling it is what it is. Thank you. Thank you for your nice words, and I am really glad to hear that you are benefiting from the things I talk about. What do you think about this week's open? Could you please elaborate your question more? I mean, I couldn't really understand what you are trying to ask exactly. I think many things about this weekly open, right? I think this would be a lovely key level that I will use for maybe the next 3 months. I don't know. I mean, this gap is something like this one. Do you see that? This is a weekend gap too, and it was created on October. Look at this one and how price reacts from it on the higher time frames. This gap is just formed, right? And also there is this 200 simple moving average right below this gap. I believe this gap might push price higher. I don't know. I will see it on the coming days. I also believe that price might sweep this high, make a midweek reversal, and come back to this gap. I believe this gap might work as a magnet for a while. I don't know. also, if I see that price is going away from this gap, I could also use it as a bias too. I don't hold on to my own analysis because everything is ever changing, right? Price is changing, everything is changing, and I could always be wrong, right? I mean, my analysis end up being wrong. I could do the perfect analysis and ties my change. Some people bump somewhere, right? Some people does some policies. I don't know. Everything can change anytime. So I don't hold on to my bias strictly. Even though everything doesn't change too much, I can always be wrong. I'm just a human being, right? If I thought that I could never be wrong, I would be a weed addict right now. I would be addicted to weed. I would be high all the time. I would probably have quitted trading. I don't know. But I gotta admit to myself that I can be wrong anytime, and that's okay. Because being wrong is not a character trait or is not a flaw. Every human being is going to be wrong at some point. That's how we learn. That's how humanity grows, right? Right? So I'm not clinging to anything. I'm not clinging to my own analysis. Price might close this simple moving average here, turn back higher, take out all-time highs once again, or price might tap this level, turn back lower. Price might consolidate between these two. Price might go above this, break, and then come back inside here, close below these levels, close below here, immediately flush towards this 23k, 22k levels. I don't know. Price might, this analysis might end up being correct. Price might want to use this tap low. I mean, it is the same logic all over again, right? The mechanical liquidity cycle or sync breakout sequence, same thing. A huge range over here, something like that. Or you can focus on these particular levels. Price broke above, test it, made high, test it, made high, test it. This is a key test level. Swept this, made high, swept it, last level. These are liquidity levels, right? And price failed to make a new high. And there is also a divergence on higher time frames, right? Price couldn't make any all-time highs, and price couldn't even close above these internal highs over here. So it doesn't look very strong. If it is not strong, and if this liquidity level doesn't play out, then where would price would go? Where next liquidity point, and it's here. So this is a nice place to observe price. And if you look at monthly chart, wicks all around the place and monthly imbalance over here. If you mark the monthly imbalance, you can see that there's some kind of difference with them. They are not exactly like other imbalances. I kind of feel like monthly imbalances are much stronger than others. I mean, even when price was going to reverse, look at this reaction from this imbalance over here, monthly imbalance. See this? Price had to hit the imbalance, receive its reaction, and then reverse back higher. And if you look at this level, for example, tap the imbalance and over here, I'm not inventing anything new, right? And I'm not telling that I invented this. I'm not telling that this is how my algorithm works. I'm not telling you that price moves like this because I wrote a secret algorithm, right? This I'm just showing you what I see, right? This is what I just see. I don't know if this is going to work in the future, but I can see that it worked pretty well in the past. So I'm just simply marking this area and waiting to see what happens. If price comes back here and receives some reaction and it turns out to be bullish, then I will be taking long SPS setups pretty much every day, because that's what happened in 2024 and I made nice money. ROI was huge. I mean, $100,000 is nothing big, not a huge money, but if you think about the capital I started with, if you think about the mental state I was in, right? I had nothing. I believe that was a pretty nice success. Why? Not because I was a genius, but because the conditions were good for or optimal for that kind of success. I mean, look at that. This is where exactly I started to make money. Let me show it. This place. I started to make money after this. It was so easy to get long setups over here. Even when price was dropping lower, it was always possible to find some nice long SPS, and also price was going back to these weekly gap levels. Let me show it. Does it show in the one? Go for. When price was going higher, I was just taking long SPS one. When it was going towards the weekly gaps, I was just shorting it, and both shorts and longs were easy. I mean, price would, if price is going to go higher, price would just go like this, tap higher, high sweep, keep going. And if it is going to drop lower, it would just drop like this, tap, sweep. I mean, I believe we can see similar price action to 2024. And if something like that happens, I will be trading with the proper experience, not experiment, experience, yes, experience is the correct word here. I will be trading with proper experience and I will be trading much better than this one. I believe this year could be a great year, so I'm avoiding everything that might cause me to lose my momentum. I don't want to gamble. I don't want to act stupid. I don't want to act like an addict, right? I want to act professional. I want to be a professional. And I want to take what I can take out of this opportunity. Until price starts doing things I mentioned. If price starts acting like that, I mean, taking out some levels and expanding back higher and leaving daily imbalances back to back. If I see a price action, for example, like this one, then I will be taking long SPS setup almost every day. And I would never stand in front of the price. I would always avoid the mean reversion setups. But until then, I gotta be careful, cautious, right? Especially when price action is like this one. I would do more hits and runs, right? That's the logic. This is another weekend gap, by the way. Let me show it on 15-minute chart from this week. As you can see here, price was bouncing between these weekend gaps. So another one here, same logic. So after price broke above and came back lower, again, same logic. Look at Friday's high, right? Now price came back to this one once again. This is the previous week's but not just the very old weeks, last week's, right? This is current week daily gap, and this is last week, and price already took some highs, and I believe we might see a reversal around here. It is possible. We are getting close to range. I don't really believe this expansion would be something constant. I believe, yeah, price might keep going higher. Price might take out these highs, but I don't think it might be something like that. I believe it might be more like this. Just like it was around here. I don't know, I might be right. I might be wrong, but I couldn't care about it. I see something like this little area over here on 1 hour chart. A zone. Let me make it green so it wouldn't be mixed with the weekly gaps. Old weekly gaps, plenty of them. 20. I don't use too much gaps like this. I used to do that and it was confusing. Right now I look at the last 4 weeks with these purple boxes. I also sometimes another indicator, right? I open another indicator. I just activate the indicator, look at the levels. I draw some of the ones on the extremes and maybe close to price, or maybe I liked. I mean, I like this one, for example. I draw it and then I close this second indicator and then continue with that. Same exact logic over here. This is a consolidation area, breakout, expansion. A tap towards the consolidation area, one here and another here. Price took both. Again, inside of this external range, price made another. And inside of this retracement leg also, price made another. Inside of this external range and also inside of this retracement leg, another consolidation, another break, another tap. Let's zoom in. This little tap over here. And if we look at with different perspective, this is another consolidation area. And based on this consolidation area, that would be the tap. Price already took it, used it, made its highs, and now price seems to be using this one. So same logic here. This is a tap. Also, this is a tap too. The tap that made this high. I was targeting opening price of February. Price didn't took it on February, and price might want to take it on May. I told it wrong. It's not May, it's March. Price might want to hit this level on this month. And when I just look at the chart, I kind of feel like price might reverse from these levels and then come back to 23k. That's what I believe could happen. Let me check the ES2. Yeah, I feel like this is a good level, but I think price might not be able to reach that too. I mean, let me show you how I interpret the candlesticks. It's very simple logic. First, I look at this high and low of these candlesticks over here. Okay, let me draw it. That last doji, right? If price closes below this, right? And then if price breaches this low, keeps going lower and closes near the lows. I mean, if this closed around here and if this was looking like a big bearish candle, price might leave an imbalance without fully reaching to this point. If price closes right below this low, price might either test this level, this opening level, or price might use this area as a resistance area and then reverse back from here. This is just my experiences. I took too many scalp trades and I was seeing things like that. Okay, if where it close really matters. If this closes this particular candlestick really close to the previous candlestick's low, then this next one can hit this level, can use this as a resistance level, right? Or maybe weak to this level if volatility is high enough. If this closure is above this, right above this high, let's say this candlestick, let me check ES. Yes, ES is just like that. Closure of this candlestick above this low, right? If it is looking like that, I would definitely target here. I expect ES to hit this level and then if it is going to reverse back lower. But I mean, when it looks like this, it's not a big surprise to see price coming back to this level. If the closure is below here, then that means a weaker sign of more weak price action. Price may not reach this level, this open here. And if it closed really below this low, far away, then it might either make a immediate repair, immediate rebalance, and then go back lower, or maybe even leave an imbalance immediately without tapping this one. I believe I talked about something really nice there. Do you backtest your system and what your data about it? Well, my approach towards backtest is a little different. Since I use more than one concept and since I rely on my intuition either, I don't look at a raw data from past price action because I'm not extremely mechanical. I use my intuition, I use my past experiences when I try to find entries. So I'm not an extremely mechanical guy. I use my intuition many times, and I also believe that price never is exactly the same. Price always changes some stuff. Also, I trade based on conditions. So, for example, if I see an expansion like that one, I can look for a liquidity sweep. Maybe I zoom into lower time frames, right? Today I saw this expansion. I saw this sweep. I took a setup, and I also took here. This one was from Nasdaq. This one got stopped out, but it doesn't matter. I re-entered though. It doesn't matter. I saw the sweep and immediately joined. But after price expanded, the same logic was over here, but I didn't take this one. I mean, this pattern. Look at this pattern. This pattern is exactly the same, right? With this one. over here. So creating a raw data about this this pattern would be just a, I don't know, I gotta find a word to keep talking. Yeah, drudgery. Chore. Yeah, chore or drudgery, yes. I believe backtesting this pattern will be a chore for me or unnecessary drudgery. I don't want to waste my time with it because I don't care the percentage of it, because it will likely be around 50%, 40%, I don't know. But I can't really create a data for the underlying context of price action, right? Because look at the things I was observing over here. I was looking at this simple moving average crossover. I was looking at this weekly gap over here, and I was looking at this momentum over here, the way this imbalances looked, right? And I finally decided that there is a momentum over here and I can join it. And then when price was around here, I told myself that that momentum might be over, price hit an objective, so we might see a deeper retracement or a reversal. So I didn't take the same exact setup on this level. I explained why I didn't take this one in the live stream, and then I saw this fractal setup and I entered it. And if and when I traded this, I believe this fractal liquidity sweep is an amazing setup. It has got a really high win rate. It is easy to trade. It is simple to see. Less trades, but they are really high quality. But when I traded these blindly without a context, I noticed that I was losing money. So context is really important for me. And understanding the context and trading with the context is something really difficult, but it is achievable. I believe it's not something I can backtest, but it is something I can forward test, and forward test is going good as long as I comply with the risk parameters, as long as I don't do silly things like this I did over here. I'm doing my best to treat this as respectful and as serious as I can. I am trying to treat this like this was a real money and my last money. But when I was alone, I got really bored and clicked, or it was over here, clicked a couple of times. I immediately regretted it. I did that once again, and then I promised myself I'm not going to. I think this one might be an accident. I got this account. I can paper trade this when I'm alone, just by myself. It is losing most of the times. But I promised that this is something serious, and I would only trade this on live stream with low risk. So this is how I am trying to build my habits. This is an evaluation account I just purchased. We can forget about it, but this is another evaluation. I have been trading for about a week, I guess, week or two. Let me check the data. By the way, guys, I am planning to make videos about the things I did. Just a second, data series. I wanna do some other live streams when market is not open or on PM session, I don't know. Just to evaluate the trades I did or mistakes I made. I understand this is my problem. When I backtest 500,000 trades mechanic, I am always break even. No, that's not a problem, I guess. I believe you are onto something there. I mean, you are. I look at the data that you found, right? You backtest something for 500 times and 1,000 times, and you see that it is break even. Maybe you try something else, extremely mechanical, and you see that it is break even, right? So what changes that break even thing? One is risk to reward ratio and risk management also. And if you are applying that criteria proper enough, then you can see that context is something valuable. Even the mechanical trading bots use some kind of context. For example, they use structure with volume, things like that. And I'm not sure about this one, but can you show you? Okay, hello Gabriel. Thank you for your kind words. Let me answer the question from Elias first, and then I will come to that question too. Yeah, you always take a one-to-one without context and it stays break-even. It is a great data. If you just sparkle a little context inside it, you will have an edge. Just little something small, something really small. For example, if you are trading it during consolidations, you might add a little rule like you might open your 4-hour charts, for example, right? Just a little rule. An example, I will open Nasdaq because it is more consolidating and I trade Nasdaq only. When we look at the 4-hour chart here, right? I got just this simple rule. Be careful about your short setups over here. Be careful about your long setups over here. That's a simple rule, right? So, if price is receiving some reactions from this level on 4-hour chart, for example, after seeing that, I was always careful about my long setups. For example, let's say I don't trade pre-session, but I just want to show it for the sake of it. Price looks bearish here. Price reverses back higher, right? Gives some nice setups. And SPS, another one, until it hits the gap. Then it goes a little above with some momentum, right? Then when it reaches near these highs and takes them out, the long setups gets a little problematic. Takes out the low, gives the entry, fails to make a new high, comes back lower, makes a fractal liquidity sweep over here, goes higher, turns back lower, and when it eventually starts to go back lower, well, it looks really nice. I believe there is no long setups over here. I mean, if you look at the liquidity only in the regular trade hours, just like I do, you wouldn't see any long SPS setups right here. But if you are using these levels as tap low levels, old tap lows, for example, this was an old tap low, but outside of the session, you might get stopped out around here. I don't use these past levels for my 1-minute entries. If I'm entering on a 1-minute chart, if I am taking a 1-minute long, the tap low, the liquidity level that I use have to be formed inside of this session, not pre-session. I'm not interested in that. For example, if price, let's say price before 9:30 open, let's say this is 9:30, and before that open, let's say price is doing something like that, and after 9:30 price does this, I don't care about this tap low. I don't take this long. Okay, I want to see something like that. I want to see this working. I want to see price going, creating a new liquidity level inside of the session. I then take it. So when I am backtesting, I backtest on high side. I don't rewind price too much. Because I don't care about creating a data. I don't care about finding a profitable model. I don't care about that. What I care about is trying my best to understand what price did, what it has been doing, right? I can't see the future. I cannot understand what price is doing right now, maybe, but I can easily understand what it did in the past. I can easily understand that price created a consolidation area, left it with impulsive candlesticks, created another consolidation area, and price did take the low of this area and consolidated above it, and eventually used that new consolidation area as a support level and went back higher until where? Until this another previous weekly gap, right? And right now price is consolidating over here, right? If price immediately took out this low over here, this is a break, this is a tap, this is a higher high, but a higher high with an already expanded price and in a key level, right? If price did take this low immediately and then reverse back higher, I might be inside of a long position. I could have taken a long. But right now, since price consolidated a little bit and then went above this range, now I wouldn't be interested taking a long position below here. I mean, I could take a long position after price takes out this level. I'm not saying if price takes this level, I'm never long in that. I'm not saying like something like that, okay? But if price sweeps this low and looks like it is turning back higher, I wouldn't take this long, because price would be invalidating a range. And I wouldn't know if price would immediately reverse from here. My experience tells me that if price is doing something like that, price could very well do things like that and eventually consolidate in some places and reverse back higher and give the internal setup that you want around these levels. So when I backtest, I'm not looking at I'm not trying to be profitable. I'm not trying to find something. I'm trying to become something. Okay? I'm trying to train my eyes. I am trying to train my brain. I am trying to improve my pattern recognition capabilities. That's how I backtest. For my entire career, I almost never did something like that. Almost never. I never did this. I think I will long this one. I never do that, okay? Almost never. This is not what I do. I just close everything. I just look at hindsight. I learn at hindsight. I practice on paper. Then I start taking my risks. Okay, we are back to the Gabby's question. Gabby. Oh, I already showed how I backtested. That's great. I don't use that rewinding stuff. I mean, I believe it has got benefits too. I mean, if I had time, I would probably do that. But right now, I really don't have any time for it. In these days, I can't really properly backtest. But if you think about it, I'm already backtesting on these live sessions. So, and when I create new videos, you should try it. You should try creating videos about the content you learned, you know. You don't have to share it. Just create it and delete it. It doesn't matter. Because creating a video, trying to express the things you know to other people, brings some kind of interesting order to your consciousness. You have to internalize things properly. After that, you can externalize them. If you cannot internalize it first, you cannot externalize too. So if you try to externalize it, even though you don't show it to anyone, shoot video, write about it, try to maybe act like you are teaching it someone else. That forces you to understand the concepts better. I think that was called Feynman technique for studying. Teaching creates feedback loop, etc. Things like that. You don't have to be an influencer for this. By the way, that's the sole reason I am doing this live streams. I don't really care about getting education money, or I don't know, I don't care about getting affiliation money, etc. What I care about is these live streams are keeping me grounded, and if I can build the habits that create this over here, if I made that certain behaviors a automated habits, then I'm set for your life. I'm set for my life, not your life. Alright guys. Alright everybody, it's been almost 3 hours. I'm feeling a little soreness on my throat. I really enjoyed this session. Price didn't print the patterns I wanted to see. I believe price might wanna close a bullish day, induce some longs, and create the high of the March, and then turn back lower, things like that. And volatility is getting increased, so I don't know. This was actually my favorite price action. I didn't like seeing that. No, it is not my favorite yet, but yeah, I believe this might be fake, because we are just in the first day of the March. I will observe and try to understand. And if my analysis ends up being wrong, it doesn't matter, because I'm not going to trade my analysis. I am trade the chart. I do not trade what I think. I trade what I see. And I always assume that what I think or what I know always end up being wrong. What is your mindset when we are inside weekend gap like today? Inside of weekend gaps are really tricky. I'm focused on the edges most of the times. For example, I looked, first of all, accumulations above and below weekend gaps are really important for me. If I see something like this, price is accumulating below it and tapping the gap several times and then closing inside the gap, that is a strong sign that price is done its business below the gap and it wants to keep pushing inside of it, right? Look at this. Price opened, tested the midpoint, started dropping lower. If this was going to turn into a nice expansion, I would expect price to keep going lower. But let's say price wanted to tap this one. After this tap and after price leaving an imbalance, see this imbalance over here, price is coming back to tap this once again, taking the lows and then closing inside the gap range with closing inside the weekend gap. This immediately signals me that price might want to hit the midpoint. When I look at the midpoint, I see this liquidity level. Then I say, well, then price might want to hit the midpoint and then sweep this one. And when I zoom out a little, see this consolidation over here and see that price keep going, keep expanding higher, I I then expect that price might want to test this high level. After price tests this high level, I have no idea. It might reverse back lower to test the mid and then go back higher, or it might do something like that. It might just keep going lower. I don't know. But what I know is prices already closed above this multiple times, and today price might be done with this gap over here. Maybe, I don't know. And I'm not trying to guess either. So I also look at previous gaps, either gaps from previous weeks, right? Because current week gaps are more like the places where price deviates above and below, uses as a magnet. But previous weekly gaps are most of the time used as a support or resistance levels. So I believe, let me check Nasdaq once again. These gaps over here might work as a resistance, and they might push price until this level. And I also like to see things like that, right? I look at this price, current weekly gap, right? If you look at the past price, mid of February, price accumulates below it and then closes above, turned it into a support. After this tap and this candlestick closure, I immediately look for scalp setups targeting this one here. On 15-minute chart, it might look like something small, but it is not actually too small. And after price hits this level, I'm done. I am no longer bullish because price has been consolidating, and this is a nice resistance level. And if you zoom out here, you can see this is a resistance level, another resistance level. Some people call it break and retest levels. Some people call it breaker blocks, right? But I don't care about the candlesticks over here, because I already know that these structural levels, for example, this mitigation block, right? Or this breaker block, I don't know, these levels are already forming based on this level. So I don't really care about these boxes, and I just focus on this one. It makes things much more simple for me. I don't need to look for multiple fair value gaps, I don't know, order blocks, breaker blocks, mitigations. Look at this. Which one sounds simpler and easier, right? And look at this on 4-hour chart or hourly chart. Breaker block over here. Mitigation block over here. Fair value gap over here. But multiple fair value gap, which one I'm gonna use, I have no idea. And if I zoom out, this big place over here is an order block. And I can try to stack confluence over these levels, right? Let's say I am stacking this all of these levels, all of this I'm leaving printing boxes everywhere on my chart like ICD does. Or I can just focus on the key level that already created this accumulation, created these taps and bounces, and then broken with this imbalance. Look at the best imbalance over here, right at this gap level. Look at the midpoint of this imbalance, this gap. Look at the mitigation block, this gap. Look at the what was that, breaker block. Look at the order block, this gap. Everything points out to this one. And I was observing these gaps for the last 3 years. I first saw it on ICT 23 mentorship. 2023, yes. For the last 3 years, I have been observing them. ICT didn't teach too much stuff about them. He was just showing, look how received reaction, look how received. He didn't tell much about them. So he was calling all of them MWOC, which mean new week opening gaps, but I think it sounds dumb because only this one is new. Others are not new gaps. Others are old gaps. And he just creating complex stuff, making us confused so we can keep worshipping in. But it is I made some I browsed the internet a little, and I learned that institutions just call this weekend gap because that's simply a gap that created on weekend. They don't call it MWOC, NDOC. They don't care about these fancy names. They care about making money. Look at this. An old gap. And this is a tableau. Right? This is kind of my pattern. But price dies it. But if you look at the gap and open the indicator, just watch this consolidation over here, right? On this gap inside of this. And then this moving average cross. And then follow the structure. 1. Price breaks lower. First sequence. Right? Retracement. First retracement. Second sequence. Third sequence. Sweep. Fourth sequence. The little double top with fail swing and then keep going lower. Fifth sequence. Zoom out. If you are a psychopath like myself, you can short it like that. And then immediately start taking partials, or you can prefer something like that, because after this 200 looks like this, we wouldn't want price to keep going above it. Or you can simply wait for extra confirmation, which is forming of the imbalance. Price took the tap high, turned back lower and placed an imbalance. As soon as this imbalance was placed, which is closure of this candlestick, just give me a second. As soon as this candlestick closes, price formed imbalance, something like that. And you may target 1 to 2, or you may use the concepts you know. I don't know. Just an example. Okay. I don't remember if I took this setup or not. And see another one here. No, this is not an SPS. Forget about it. My mistake. So today, in order for me to take a short setup, I need this cross. And this cross doesn't seem so close. Oh, I see a nice long setup over here. But I was a little late. Let me think. I will check ES2 on 1 minute chart. ES looks uglier. Go back to Nasdaq. This is something I used to trade many times. This as a support, this, and price also took this low and went to this level, but I can't be so sure about current conditions. I mean, if this was the month of April or May, I would probably take a long position from this level, right at this level. Right now I'm suspicious because of the things I mentioned, because price wanna keep chopping, consolidating. Now I see this tap taken. Alright, that's good. We are at lunch. Is there an expansion at lunch? Let me look at the 30-minute chart. 1 hour. Alright, 50-minute. I don't know. I think I will try a little long setup over here. Buy stop entry above this candlestick as soon as it gets close, but not on ES. I almost opened a long on ES. Let me open micro NQH6. All right, did NQ take out this high? Not yet. Buy stop one and another one. Oh, I clicked market once again. Let me erase that one. I accidentally clicked market, so I immediately closed positions because this is my trigger. If price takes out this high, the high of this doji candle, it was my trigger. If price doesn't take this, I'm not taking this trade. I would rather see price not taking my entry and start going lower. Maybe create the combo I like. I would like that setup. The good thing is price is really losing its momentum. If it is really turning bearish, most of the time it doesn't take the entry. Okay, dear Nasdaq, if you are going to go lower, don't take my entry. Don't break this level if you are going to go lower. I think buy stop entries are really good for me, especially if you are struggling with overtrading. I definitely recommend taking your entries with buy stop, because it's not like limit entry. Limit entry feels like catching a knife. You want to see price doing something, confirm something, and then market enter. But market buys has got their own issues either. So if you don't, a market buys might cause overtrading. I might leave the stop loss over here, or maybe even deeper. I don't know. I will add it. And I will definitely take partials on 1-to-1. Price might be stuck on this 20 simple moving average over here. So that's why I want to take a partial on 1-to-1. Let's watch what happens. Right now it looks nice. I like this closure. This closure is a signal that price might keep going higher a little bit more, maybe inside of this imbalance. It didn't reach the 1-to-1 yet. I think it's around this level. I will sell limit 1 here. I will just check ES little quick. Yeah, it looks kind of nice too. Nasdaq looks a little bit better. I mean, Nasdaq looks like it might at least take 1-to-1. I was talking about the weekly gaps, by the way, weekend gaps, or it doesn't look sweet, it looks ugly. It might take out my stop loss right now. It could have been nice to see price taking out the this partial over here. Then I could maybe trail my stop, but it did me dirty. You are dirty, Nasdaq. I think if I was quick enough, this could have hit 1-to-1. I think it was actually my mistake. Yes, it was definitely my mistake. Let's see what happens from now on. It definitely seems like a stop loss. Definitely seems ugly. If it takes out the stop loss, I would probably keep waiting. Because I mean, this was a tap low and it already made a 1, 2, 3 drive pattern, triple low. And we are at the launch and price is getting slower. When I consider all of this, I think that price might want to do something like that, the combo I was talking about, or maybe entirely reverse back lower. The good thing is, if I can keep waiting patiently, I can catch one of them. I mean, price is going to show me which one it is going to do. It will do one of them. Couldn't take this highs, huh? Equal highs. I was expecting it to take out this, but yeah, it's normal because it was formed right in the middle of that gap over there. ES didn't take out this low once again. Nasdaq is doing me dirty today. This is another stop loss. ES didn't take, Nasdaq take. Nasdaq took. Yeah, that's okay. I will keep risking small, and sometimes I will catch a expansion, and during that expansion I will not take partials. Instead I will add to the positions more. That's how I plan to catch killer days, and this is a filler day for me. I mean, there's an expansion, but the way it went wasn't so great. So this is a filler day for me. Since I trade with prop firms, I need these filler days. I need to survive this. One last sweep and then going higher. ES looks better. I still don't trust it too much. I will be cautious. I can wait for this candlestick closure, 15-minute candlestick close. Guys, I'm getting really hungry and it's been 3 hours. So I have to excuse myself right here. If you have any questions, you can ask that on Twitter, X, from DMs. My DMs are open. You can send a message request. I am calling it a day for today. Let me check this account over here. Okay. The more time I spent. Thanks, Gabriel. See you tomorrow too. The more time I spend, the more tired and hungry I get, and my cognitive performance is getting worse over time. So I should respect that I'm a human being. I'm a biological creature and I have a biological clock, so I'm not as sharp as I was. So I'm ending this session over here. You are welcome, Andrea. Did I pronounce that correct? Andrea. Okay, I will learn it from Google. Have a nice one.